Hello, back to the fourth revolution. We talk about stocks for your portfolio of the future. Today, I have a handful of top stock picks for 2022 as this trading commences in the face of rising interest rates. We have opportunity at the discounted valuations, especially in high growth names. So I've got a couple stocks looking towards the future of our economy, and we're looking at a new normal. The economy is never going to return to the pre-pandemic environment that we are so used to. Going to see something totally different with secular growth stocks driving our GDP higher and controlling the economy, the global economy moving forward as we reemerge with ambition from this pandemic. So I've got some stocks in cybersecurity, a couple under the radar chip innovators. Got a travel and leisure play for you, as well as a mobility stock that is poised to explode out of its discounted valuation currently. And finally, I have a fintech innovator that is AI driven and positioned to soar coming into these recommencing roaring 20s. So let's take a look at these opportunities. This is my top stock picks for 2022. The first segment we're going to talk about is cybersecurity. Cyber threats have never been greater, with more endpoints than ever before in this digitalizing world. And Jerome Powell himself, the chairman of the Federal Reserve, has been quoted saying that cyber threats are the biggest economic threat to the U.S. economy today. That's in the face of 40-year high inflation. So cybersecurity is obviously something that's not going away anytime soon. It is only going to continue to be a market of interest. And the biggest stock that I'm looking at is CrowdStrike and their AI-driven platform, which is best in class in this segment. It has come down to levels recently I am comfortable at buying. It bounced perfectly off of this 176 roughly Fibonacci retracement you can see down here at the 361.8% level, and we are headed higher from there. This stock is going to be a secular growth player with its Falcon platform driving new innovations on a seemingly daily basis, and it continues to drive that secular growth that I discussed earlier. That it's not going to stop with interest rates or any kind of economic activity. And the first thing on the CapEx list as far as what companies are going to be spending on in 2022 is going to be cybersecurity, and CrowdStrike is a go-to in this space today. Semiconductors have been brought to the forefront of interest as far as what investors are looking for in 2022. And their recently discounted valuations is providing us with a great opportunity to jump into some of these under the radar chip innovators. Looking at a couple of small cap stocks here. First one being ACM Research, and this is a company that has a lot of exposure to China. It recently bounced off this 77 Fibonacci retracement level here, and we are headed higher, looking at price targets between $100 and $150 a share. This company has traded sideways for about a year and a half, and this is because of all of the regulatory headwind we've seen in China. But Biden is making an obvious effort to redeem our relations with the company and alleviate any of the political turmoil that we've had. And companies like ACM Research, which provide semiconductor creating equipment, is poised to explode. It's only $1.5 billion market cap. It's a small cap company, and like I was saying, it has large cap ambitions. And as chip making kind of explodes in mainland China, ACM Research and its best in class equipment for cleaning and creating these chips is poised to explode, and its under the radar profile provides it with that significant upside. I'm looking at 50 to 100% upside from where we're trading at today. Next stock is going to be Smart Global, ticker SGH. And this thing has just been on a tear ever since the new CEO, Mark Adams, came in. And it's because this company is transitioning from what it was previously, which was a legacy memory chip maker, to an innovator that is poised to explode with in markets in AI, data centers, big data, as well as a number of other next gen innovations, which are going to continue to push this stock towards its intrinsic value. It just had an earnings report, which caused this 15% one-day capitulation, but support levels were held, and we have this 50-day trend line that is holding us up. I'm looking at price targets between $90 and $100 a share, which is significant upside from here. With after this earnings report, we had a lot more bulls than ever, and the 15% capitulation just provided us with a great entry point. Like I said, we're looking at a sizable upside in 2022 from here. Next thing, travel and leisure. The sector has obviously been under pressure with people being concerned about not only the latest Omicron variant, but all of the variants prior to that, with the pandemic really putting a damper on travel. Alaskan Air is the best positioned airline in the travel and leisure segment today. A lot of its bigger cohorts like Delta, United, and American all have seen their prior bottom lines driven by business travel. But business travel, in reality, is never going to resume to the level that it ever saw before. So we're looking at Alaskan Air because of its budget offering and its ability to drive profitability before any of its other larger cohorts. Like I said, it did this in its last earnings report back in October, and I'm expecting it to continue to look up from here as travel and vacationing resumes in this new normal. So playing the new normal, this is going to be my mobility play. Uber, the mobility as a service company, has really just been under a lot of pressure with regulatory headwinds, as well as unprofitability and timelines of profitability being pushed back. The company is poised to explode in 2022 with mobility as a service. A number of different things. We got rides, Uber Eats, Uber Freight, and its other plays just poised to be perfectly positioned for this new digitalization that we've seen. Like I said, in the past, we've seen 10 years of digitalization, digital adaptation shoved into just 10 months of lockdowns. And Uber's, digitally driven mobile platform allows users to take advantage of this, and is really perfectly positioned on a global basis to take over the segment that it is currently leading. And this is, like I said, a play that is heavily discounted off of its nearly $65 high. We're looking at $44 a share today, and I would say this is one of the biggest bear cases of 2022 among analysts, and I wouldn't let this one go. The fintech segment has been under significant pressure, but the financial part of our economy, which was previously driven by big Wall Street firms, is now being threatened by the incoming new tech-driven financial companies. And one stock that I love is Upstart, ticker UPST. And this company has really capitulated since mid-October in the face of rising interest rates. It's one of the unfortunate victims of this interest rate sell-off, having capitulated from over 400 a share down to 120 today, bouncing off this key level right below 110 a share, which is represented it doesn't go all the way back, but where we see a support level, a resistance level right out of the gates from its IPO. Within a month of it IPOing, it hit this level, bounced lower, and now it is working as a support, which it also used back in July. And I think this could mark the bottom for this stock as we head higher. I'm looking at price targets, between 190 and 250 a share. As I said, this volatile, high beta fintech player is poised to take over the credit assessment segment, and it's different than other fintech companies because it's actually working with the big banks to allow them to lend to more people and provide them with a broader portfolio of customers, as it utilizes more like 5,000 to 6,000 different components of a customer's characteristics, opposed to the 30 that the most sophisticated softwares that these big banks currently utilize. And it says, its CEO at least is saying that its ability to assess credit worthiness is 5x what any current system that the lenders are using, the most advanced ones are using. But it still has a long way to go, and its AI-driven platform is only going to improve. So with its high growth profile between double and triple digit top line growth, I see this as a keen buy after its recent fall down, and I would continue to average lower, but starting a position today would be prudent. 2022 is going to be a stock picker's market. So it is prudent to make sure that you are picking the best positioned stocks going into this fourth industrial revolution, which I have been discussing over the years. So let's take advantage of this interest rate driven dip. As we know that Jerome and its accommodative administration at the Federal Reserve are going to continue to keep rates low. And in fact, they dropped their long-term rate during the pandemic as Jerome recognizes that we're in a different economic environment than we ever have been before. The post-pandemic world will be different than the pre-pandemic one, and it's going to be driven by digital technology. The 6 stock picks that I provided with you, perfectly positioned to take on this digitalization and take off, and the recommencing Roaring 20s. So if you can check out Zacks.com/promo, their latest promotion, and also take a look at my picks on the on Zacks.com/headline trader, which is going to be my portfolio. So thanks for watching, guys, and I look forward to speaking to you guys next time.